Is the bull market actually coming to an end? Or is all of this volatility just the market catching its breath before the next leg higher? The government shutdown may finally be resolved, but I'm going to be honest, we're still very far from being out of the woods when it comes to market structure, macro conditions, and what the next few weeks could look like heading into the end of the year. We have one FOMC meeting left in 2025, and normally that wouldn't be a big deal because the expectations were already set. One more rate cut to close out the year, but with the government shutdown interfering with the release of key inflation and labor data for October, the Federal Reserve may now be forced to make a decision without two of their most important data points. And when the Fed is flying blind, the market tends to get nervous. Add in all the AI bubble talk, the lack of powerful Q3 earnings from big tech, and rising concerns about whether this bull market is actually sustainable. And it raises a very real, very critical question. Are we heading for a major shift in trend? We're going to break all of that down today with an objective, data-driven approach. But before we jump in, make sure to hit like, subscribe, and tap the notification bell. Your support truly means the world to me. Let's start with the big picture, because the macro environment is setting the tone for everything we're seeing on the charts. Here's where things get tricky. Throughout most of Q3 and Q4, the market had been expecting one more rate cut by the end of the year, but Powell has already been taking a noticeably more hawkish tone, and several other Fed members have recently walked back their optimism for another cut. Without updated inflation and employment data, Powell may not want to take the risk of cutting too aggressively. What does that mean for the market? It means uncertainty, and uncertainty leads to volatility. And on top of that macro backdrop, we are now dealing with another narrative shift, increasing skepticism about the AI boom. Hedge funds, retail traders, long-term investors, everyone is asking whether this AI wave is truly sustainable or if valuations have simply gotten too stretched too quickly. Combine all of this with the fact that Q3 earnings were not impressive for many mega-cap names, and you have a cocktail of caution heading into the end of the year. Now let's dive into the SPY and zoom out, because the weekly time frame always gives us the clearest and cleanest picture of the trend. For the past 2 years, the S&P 500 has not broken its long-term uptrend. Not once. We've had pullbacks, we've had volatility, we've had scary headlines, but we have not broken trend structure. The only moment that even came close was back in April when the surprise tariff announcement caused SPY to momentarily break below its previous higher low. But even then, we never formed a lower high, and trend was never lost. That is critical. Also important, SPY has consistently found buyers at the 50-day moving average for years. When it does break below the 50-day or even the 200-day, the price snaps back quickly, which signals strong underlying buying pressure. And here's the key. We are only 4% off all-time highs. That is nowhere near a correction. A real correction, the type that resets the market, doesn't start until 10% down, which would put SPY around $620. A bear market starts once we drop 20%, which would put SPY around $551. So the big question, are we even close to those numbers? Right now, the answer is no. But the daily time frame tells a more nuanced story. The daily chart is where things get tricky. Last Friday's low is still intact. The October 10th low is still intact. And until SPY breaks below $659.50, we cannot confirm a daily downtrend. But the red flag is this. SPY attempted to reclaim 685 and failed, forming a lower high on the daily time frame. This puts the daily trend in a neutral state, not bearish, not bullish, just neutral. And that means one thing matters more than anything else. The 674 level, this is the level that will define next week. Why? Because $674 has acted as ideal support near the all-time highs, a double inverted hammer support zone, a key confluence with the 5-day and 20-day moving averages, a breakdown zone on Thursday with strong volume, a rejection point on Friday's rally. This level is not just important, it's everything. Bullish path for SPY. Break above $674, retest, reclaim $680.50. Trend stabilizes. Bearish path for SPY. Reject $674 again. Move toward equal lows at $662.75 and possibly $654. And here's the critical takeaway. A move into $654 is still a weekly higher low, which keeps the long-term uptrend alive. It's scary in the moment, but healthy long-term. So heading into next week, my bias is cautious but data-driven. Until SPY proves strength over 674s, I'm not actively leaning bullish. QQQ is mirroring SPY almost exactly. We have a clear lower high on the daily. Friday gave us equal lows around 599.50, and the key pivot for next week is 611.50. Why 611.50? Because it's the level where the prior higher low formed and where QQQ can reestablish a neutral trend. Bullish path, reclaim 611.50, neutral, positive structure. Bearish path, reject 611.50, move to 596.75, next support at 588.35. QQQ is heavily affected by NVDA earnings, so until Wednesday expect chop. NVDA, the main event of the week. Let me be very clear. NVDA will decide the market this week. I'm personally not trading NVDA pre-earnings. The risk-reward isn't favorable. But we must understand the chart because it affects everything else. SPY, QQQ, SMH, AMD, cloud, AI, and even risk on sentiment. Here's the setup. Lower high at $200, equal lows around $180. $180 is major historical support. Upside scenario, reclaim $192. Break balance highs, move sideways until earnings. Downside scenario, reject $192, revisit $184, retest $180. If $180 breaks, things get violent. NVDA earnings, Wednesday after hours, is the single most important catalyst of the week. MSFT, potential major breakdown. Microsoft is one of the weakest mega caps on the board right now. Two problems. One, long-term double top formation, neckline, $495 peak, $555. Two, short-term bear flag, lower highs, $555, $515, drifting lower. If MSFT breaks $498.50, it triggers a bear flag breakdown, a double top breakdown, a likely move toward $468 at the 200-day moving average, increased fear in tech and cloud names. This chart has my full attention. Apple is showing resilience while everything else weakens, which is often a bullish signal. AAPL currently has a smaller balance range, top around 272.60, a larger balance range, bottom around 266.60, multiple days of holding support while the market fell. Upside, break and hold above 272.60, target all-time highs. Downside, reject at 272.60, move toward 266.60, possible further breakdown to 258.65. Keep an eye on Apple, it often leads. Amazon had a picture-perfect cup and handle breakout setup until Friday's overshoot threw it off. $238.75 is now your make-or-break level. Bullish, reclaim 238.75, retest, continuation higher, only if SPY/QQQ shows strength. Bearish, breakdown, fill gap, target 227.60. Google, major news. Friday looked rough. But then Monday pre-market changed everything. Berkshire Hathaway initiated a 4.3B position in Google. That's a massive vote of confidence. We are now gapping to the top of the balance range, near all-time highs. Bullish scenario, break ATH at 291.70, retest, push higher. If SPY/QQQ support, this is a clean textbook breakout. Neutral scenario, break above, fall back inside, chop. Avoid this. Bearish scenario, break above, fail, retest, fall to $276.25. If the market is red, this becomes very tradable. Meta has been crushed recently, the worst of the mega caps. There's concern around enormous AI investment, unclear ROI timeline, slowing ad demand, rising competitive pressures. Meta may have formed a temporary bottom at $604. Upside, break Friday's high at $614. Scalp target 628, short-term only. Don't overstay. Downside, break $604. Retest, fall toward $586.50. Meta is one of the cleanest short setups if weakness continues. Tesla finally broke below its multi-week balance range. Thursday gave us the initial breakdown. Friday gave us the retest and rejection at $412.50. Tesla is weak and the structure below is thin. Downside targets, 365, 356. If TSLA hits 365, buyers likely show up. PLTR is sitting inside a large multi-month balance range. Bottom, $171. Top, $187. Upside, pullback. Support at 171. Break back over 176. Target 187. Downside, break 171. Reject. Target 163. But the path is choppy. Avoid the middle. AMD is waiting on NVDA earnings. The cleanest move is post-earnings. Upside, break $264.65, retest, new highs. High confidence if congruent with NVDA, neutral, chop until Wednesday. AMD looks strong but directionless right now. Robinhood is in a clear downtrend. Friday's bounce above 120.50 doesn't change much. Downside path 1, set a lower high under 130, break down. Downside path 2, break back under 120.50, retest, move to 115, gap fill. My bias remains bearish until Hood proves otherwise. Disney is quietly setting up one of the most concerning charts among large caps. Major MAs crossing bearish, equal lows, gap below, weak revenue impacts from TV YouTube dispute, death cross forming. If DIS breaks $105, downside target is $93. A massive gap from May is waiting there. I like January puts for swings, weeklies for intraday downside plays. Big opportunity here if the breakdown happens. Diamondback Energy looks strong and has a major breakout forming. A 4-month balance range is now testing the upper limit. Upside, break $150, retest, target 165s, take partial profits near $158. This is a beautiful swing setup with sector strength to back it. Micron has shown extraordinary strength, easily the strongest semiconductor name recently. Friday's upper wick gave some hesitation, but pre-market strength puts price back above $248. Upside, pull back to confirm 248 as support, retest ATH at 257.16. Again, NVDA will influence this, but the chart is incredibly bullish. This upcoming week may be one of the most important weeks of the entire quarter. Between NVDA earnings, critical trend levels on SPY and QQQ, and big breakdown setups forming in names like Microsoft, Tesla, and Disney, the market is giving us opportunities at every level. Remember, patience is a position. Let price confirm your thesis. Let the trend speak for itself. If today's deep dive helped you prepare for the week ahead, make sure to like this video, subscribe to Gen W, and drop a comment telling me the tickers you want me to analyze next. Have an amazing week, and let's make some money.